for a lot of people is that they're not going to fully understand and embrace the reality that yes, the economy is going to the world. The world we are living in here, this is a different world we're living in now. Okay? Things are automated. That's just the reality. And if you don't embrace the fact that this world is becoming a lot more automated, you will struggle. You and I will struggle. And here's the thing, you don't want to be the person at the end of the day, okay? Listen to me on this one. You don't want to be the person at the end of the day not prepared if the world shifts. A lot of people struggle with the AI thing. You know, it wasn't for them. They thought it was far in the future, it was years in advance, etc., etc. And what has happened since then? Most people that weren't ready and saw themselves struggling with AI, they are now here behind the eight ball. Okay. And there's nothing we can do about it now. Now you are already late. And now that you're late, now you're looking for what are my solutions? And people think at the same time, you know, because of the industry I'm in, I'm a doctor, right? I know a lot of doctors. I know a lot of people that are not about it, right? So whether it's a doctor, you've got um lawyers, you've got CEOs, you got business people, you got all these industries, and what's happened is that a lot of these processes have become automated. And here's the thing: the reason why automation exists with this and why people are struggling is that they don't believe that there's a chance that that job can be evaporated. But two things are working against you. First is artificial intelligence, is the first one. But the second one is robotics. You cannot sleep on the fact that there are literally robots being created in real time right now to be able to do a lot of the human functions. Think about this. Somebody can clean, can cook, can clean the house, can wash, fold the clothes. I was just folding clothes earlier today. All of these things a humanized robot can do. So if they can do the essential basic functions in the home, why would we not believe that at some point in time, these businesses can believe that these humanized robots can do the essential functions in the work setting? And all of a sudden, what happens is that now you're not needed. But if you identify that your purpose or your skills or the only thing you bring to the table are those essential functions that you bring to the workplace, you then are going to struggle to adjust to what society is going to. And that's what's on the way. And here's the problem: social media, the internet, doom scrolling, looking at cat videos, looking at half naked chicks, all of these things are consuming your time and evaporating you and plaguing your brain so that you're feeling so tired, so exhausted. Everybody's like, man, I'm so tired, I'm so tired, I'm so tired, I'm so tired. But you hear what they're doing during the day, man. They work for a little bit, they're scrolling on the internet all day long, looking at the newest thing, the latest thing. These algorithms already got you hooked into whatever you wanted to watch and listen to. So now your time is getting evaporated, which is taking away two things: creativity, time to focus on creativity. How do you continue to repackage yourself? How do you evolve? How do you expand yourself so that you can continue to transcend time regardless of where society goes? And then number two is your desire to continue to pursue. Those things are being lost by elements. And so because of that, people are losing time when they should be building things for their future. So aside from just the finances, yes, investing and all these things, I'm all about it. You have to be continuing to reinvent yourself. You have to reinvent yourself all the time. Yes, you are still the same person, but that person continues to evolve. So yes, at one point you used to be a car salesman, but today, because of the way things are going, you now have a plumbing business. You've learned the skill of plumbing when you used to only sell cars, but because people aren't buying cars as much right now because of the economy, you picked up a new skill that allowed you to now to evolve this into something else. You still are the guy that can sell a car, so you still have the skill, but you've now created another skill that can continue to help you make money. So most people need to continue to be a little more creative and continue to be on their toes reinventing themselves as society goes on. So that's the first thing. The second thing is that as we're going with this world that we're heading to now, we are seeing that the jobs that are being evaporated are very specific. You've got the top level executives, these are the visionaries of what needs to be created. You've got the middle tier level of the high end executives, the managers, the skilled laborers, these people that are the money makers of those details. And then you got the lower level people, that those are the people that are doing the things that are not sexy. These are the things that nobody really wants to get their hands dirty on. The hands-on stuff, the stuff that requires a lot more physical labor, getting you tired, etc. Most of the emphasis right now in AI and robotics is that middle tier ground, which is sometimes called as the middle class. This middle piece, these are the jobs right now that are most at risk because many of those functions can be automated or done by a robotic. And so that's the class that's mostly at risk. So if you're in these 9 level corporate level jobs, all these things, doing things behind the computer, if you're doing something and the majority of your job is behind a computer, you need to be on red alert. It doesn't mean your job is going to do something today, but tomorrow they might. And if it's the day of tomorrow and you don't have a plan, this is where trouble begins because now you're on your heels. You're not on your toes, you're on your heels, okay? So yes, the economy is going to go a different direction and do all these things. I get it. I'm with you on all those factors. But just from a basic, essential human survival perspective, you need to not just have these blinders on, not pretending like these things aren't happening because it's literally happening in front of our face in real time. Just a few weeks ago, Block, they let go 40% of their workforce in one swoop. And it was what the CEO said that was the scariest part. He said is they could have drawn this out for the next 5 years and done a slow bleed. But they said this does nobody any good. So we're just going to do it all now because we know we don't need those jobs. That is extremely scary because every day you're reporting to work. You're going somewhere you may not want to be at, but you have to go because you got people depending on you to take care of business. So you have to go. So you're heading somewhere that you don't want to be. And on the other side, they know good and well that they don't have any long plans for you. They're just saying, man, I don't have it in me to do it right now. Let's just keep prolonging this. So if you're seeing that work is getting slow, you're not getting a lot going on. There's not a lot going on. I feel like things are slowing right now, slowing down. And those feelings, everything that you're feeling on that, those things are red flags. You need to be on high alert because if you wait till it then happens and you didn't have a plan, now you are playing catch up on life. And as you're playing on catch up on life, that gets very expensive. That's where the credit card debts go. That's where you start defaulting on things. Your credit score goes under. All of this is where the spiral happens and you go further into the hole while you're trying to work your way out of the hole into financial freedom. So you have to be always thinking ahead. Now, so that's the jobs piece. Now let's talk about specifically where we are with the economy, okay? Because the economy is the next piece of this thing. Where are we heading next? Of course, we're in the middle of a war. If you're in the United States, I know we have people that are watching from all over the world, but specifically majority of our listeners are in the United States. If you're in the United States, obviously the United States is in a war right now with Iran, okay? We've seen that it was going down, it's going up. We're talking about a strait that's blocked off. They're bombing. You got Israel, you got Lebanon, you got all these things going on. Got it. Two things we have to understand. Number one is that, and again, it's not a political channel. So if this is your first time here, first off, welcome to our page. I hope this page is going to be beneficial to you. Appreciate all the 800 and some odd subscribers we got. But this is not a political channel. This is an investing channel. So you have to understand there's one rule when it comes to this particular page. You have to remove politics when it comes to investing. Gotta repeat it again. You gotta remove politics when it comes to investing. The only time we talk about politics here is when it affects our money. Otherwise, you gotta go on another page. You can go on Tucker Carlson. You can talk to whoever you want to go to. But on this page, as long as if it affects our money, we gotta talk about it. So right now, these politics and this war is affecting our money. And so here's the reality, okay? The first thing you got to understand is that as long as we stay in uncertainty on the other side of the world, yes, oil prices go up, right? But as oil prices go up, we're paying more at the pump by default. The pumps are going up, we're paying more out of pocket. But here's what you got to understand. You can find ways to claw back some of that same money you're giving more to the pump. These companies, many of them, are publicly traded. So one of the savvy moves we gave as alerts to our investing community, right, financial freedom builders, is the moment war was hitting out, the first thing we said is that pumps will go up, gas prices will go up. Let's ride the wave with these companies because we're going to pay more, so they're going to give us more based off of the profits that they're making. And so the Occidental Petroleums, the Chevrons, and all these other companies were getting invested into and are still in real time while the pump is going up. So the pump is going up and our gains are following at the same time later. When the pump goes down, we'll sell out of the company and now we've made a significant profit and now we can use that money to go back into putting it into these companies that we like. And I'm going to talk about it. If you stick around long enough, I'm going to give you guys one company that we really like right now. Of course, this not financial advice. Of course, if it is for education and entertainment purposes only, but if you stick around long enough, although this is not financial advice, if you stick around long enough and watch enough of our videos, you'll start saying, okay, it's not financial advice. However, every time I happen to listen to this, what they're saying on here, and I implement it and I replicate it on my side, for whatever reason, I end up with significantly more money than I did before I watched the video. So I'll leave it at that. But going back, you start putting the money into these gas companies, the prices rise up, right? So here's the thing. The further we go in, the longer we stay in the trade. Now, eventually, trade will end, and so will the war. For a lot of just obvious reasons. We got to sometimes, like we talk about a lot of times when we talk about when investing, when in doubt, zoom out. When in doubt, you zoom out. Why? Because sometimes we get so caught into what's going on the day-by-day and play-by-play that we really miss what's actually really going on in the grand scheme of things. And a lot of times, this thing right here, this apparatus, doesn't help us, right? Doesn't help any of us. Because specifically what happens is that we get lost in the, oh, man, they bombed this guy. Oh, man, J.D. Vance, they said they didn't leave with a negotiation. And, oh, man, Donald Trump said this. He tweeted this. We get lost into the play-by-play. Zoom out, you start seeing, okay, this obviously starts to make a lot more sense. A couple of things when you zoom out that you start to realize. This war can't last much longer for two reasons. Number one, the gas prices are rising. They cleared $4, which was really high. And now, the last couple of days, we're seeing that they're coming on under $4. Why? Because now things are settling down with the war. So number one is one of the reasons is that the gas prices are too high, and that could eventually lead to more inflation. So you can't have that. You can't have that if you're the president of the United States. But the second reason is you can't have that going on because this year we are in the middle of the midterm election season. This year in November, we're going to be electing Senate officials who are going to take the chairs at the Congress. The Republicans want to maintain control of these chairs. We clearly have seen a disaster with immigration the last 2 years. So if they plan to recoup chairs back in here after they've got a whole mess with immigration, do you really believe being in the middle of a war with exorbitantly high gas prices helps their case to get chairs? Doesn't make any sense. So when you zoom out, you say, okay, although day by day and play by play, I can't see how it's going to end. But I know that this has to eventually end for the good of the Republicans' chances to reclaim chairs. Whether they do or not, it doesn't matter to the story. Again, you're going too far into politics. It's just about understanding how it affects our money. This has to end because they need to try to win back chairs. So the trade is only for a little while. The stock market pulling back is only for a short while, at least as it pertains to the war being a reason, and we've already seen that. So now I'm going to take a second and I'm going to share my screen. And we're going to take a little bit of a deep dive. So if you guys have never seen a charting lesson, I'm going to give you guys a quick charting lesson on something. Hope you guys will enjoy this one. And we're going to try to give you guys a little bit of context to what is really going on and why it's happening. Okay, let me share my screen. All right. Pretty sure you guys can see my screen. So here's the deal. This here represents the SPY. The SPY is an ETF. An ETF is an exchange traded fund. Okay. This is basically a combination of stocks. Again, another time I can explain this to you guys. Whoever's interested in that, you're welcome to connect with us on another time. I'm just giving you guys high level detail. But the SPY, okay, represents a combination of different stocks, okay? And so this is the S&P 500 represented in one swoop, okay? We saw that the war happened just about, what is it, end of April, end of February, early March, if I'm not mistaken. So if I go back, let me go back to the 1-day chart, okay? Each of these candles here represents 1 day of trading in the charts, okay? So as you can see here, sometime at the end of January, we peaked at about 695.94 in the SPY, which represents the S&P 500. And since then, although there's been some little ebbs and flows, ups and downs, quite honestly, we've just been on a straight heater down, okay? And we saw that here, and this was the peak here, and the February was where the third, what we call a triple top, right? It went up, came back up, and came back up here. This is what they call, it's called bearish, right? This is not a good chart pattern, these threes. 3 times it tried breaking through the ceiling, and it couldn't. And so without enough time, it's almost like you're hitting your head on the ceiling. You're trying to hit your head, you're trying to break through a ceiling and you're using your head. The first time you hit it, boom, you didn't get it. And then you're like, man, it hurt my head, but I'm going to try again. You hit it again, boom, it doesn't happen. You hit your head again, now it hurts even more. And then you try a third time with all you got, boom, and you don't. But like now your head is hurting and you say, man, I don't got enough right now right now my head is hurting too bad, hitting the ceiling. I don't got enough right now to try. So I need to take a break. That's what basically happened here in charting terms, right? Just using a way, this is something that we do in our financial community. We try to explain finance in a way that's easy to understand. That's basically what happened. Hit it head here, boom. Tried it again, boom. Tried it again here. And by the third time, basically had a headache and needed to take a break, and that's what happened here. This is the headache that's taking the break, okay? Now, in real, practical, and if that made sense, put a 1 in the chat, by the way, if that analogy made sense to you. Now, in practical terms, okay, this is what happened. Third time, here was when the war started, okay? The talks about the war in Iran, and then, of course, the whole thing started. And since then, we've been on a downward trajectory, okay? Until we got down here to about 629.98, which was basically the end of March, right? At the end of March, there were talks that they were going to try to work on a potential ceasefire, that, they were going to try to work this out, et cetera, et cetera. And so here we have bottomed, and then we've worked our way back up. Now, why do you think we've bottomed here and we've worked our way back up? It's because the market is anticipating that, again, the gas prices can't stay this high forever. And 2, at some point, this has to end because we've got to move on to other things because there's a midterm election. The president knows he can't stay in this too long, which is why he's trying to push this thing to be done. And so since then, although the war hasn't ended yet, we now are seeing that the market is starting to go up. Now, although the war is on the way out, I'm going to give you guys something we told our financial community back in February. A strategy when it comes to war. Again, I go back. Remove emotions, okay, when it comes to investing. Politics, emotions, remove that stuff. This is not, of course, from a humane standpoint, nobody wants to see anybody die. Nobody wants to see anybody die, okay? But now we got to put back the finance hat, right? We're trying to make money, right? This is a journey to what? Financial freedom, okay? What we said is that when it comes to wars, it doesn't mean just the U.S. war in Iran. This was the same thing. It worked with the war in Ukraine. It's worked with all the wars. Okay, you sell the bombs, and then you buy the body counts. I'll say that again. You sell the bombs, you buy the body count. If you are going to take that saying away from this message that you've been hanging on long enough, I'm going to restart and conclude the plane. I'm going to land the plane. I wanted to make this brief. If you're still sticking around and you heard that saying, and you're going to remember this the next time you see of a war when it comes to investing, write the saying in the comments. Sell the bombs, buy the body counts. Up here, once we knew they were going to war, it was time to sell out of any of your, specifically, short-term trades. Now, if you're doing long-term investing, I'm investing for retirement, long-term and all this, this is not a time to sell anything. You could have, if you're managing accounts and you're savvy, have at it. Otherwise, if you're a long-term investor, I would pause on the buying because we're going to go down. And then once you start seeing that, there's signs that it's coming to an end, the diplomatic stuff, they're talking about, man, we lost so many lives, this is and that. Then it might be an advantageous time to get back into your long-term investment because you're going to start working your way back up. And if you're a short-term trader and all these other things, swing trading and all this, not the right time to start buying in the market the moment bombs start going off. That is the worst time. Okay? So since then, when the war started, the bombs started going, the market just kept falling. That's when you start selling the bombs. But around here, we started hearing what was said around this time. Oh, there are no leaders for us to talk to. Body count, right? Oh, there's a new regime of people because they're all dead. Body count, right? This is when you know we are approaching the bottom of the scenario at hand. And since then, although the market and the war is not resolved, we very well could pull back a little bit. It could very well happen. There's a gap here that needs to at some point get filled. For those that are technical traders, I got you. But we're not at the bottom, at least for this situation. We're not going to reach again the bottom in this situation. In another situation, we can go further down. That's for another day. But in this particular situation, we have already reached the bottom based off of what we're seeing. And so this is a strategy you can use. So with oil, while this is going down in a war, although I won't pull up the chart, this I'll leave for you as a homework assignment. Pull up the chart, OXY. The ticker symbol is OXY. It's called Occidental Petroleum. Look up that chart around, again, the 26th of February all the way until the 31st of March. See what's going on with that pattern. Is that pattern also going down, or is it doing something else? I will leave that for you to look into next. But with the market and wars, you sell the bombs and you buy the body count. So yes, I think we have already bottomed in this situation. But this is my just humble assessment. I don't believe, though, we have bottomed in the market for the year. I think later there will be another fall. And I think it'll be lower than 629 the next time. And I think that'll be the second fall. Because on average, during a midterm election, the average pullback in the S&P 500 over the last 75 years has been around 19%. As bad as it's gotten, 695 was at the peak, 629 was at the bottom. I don't know if you're a mathematician, if you know your math, if you got a calculator, but 19% of 695 is not 629. So to me, this is the first part of the correction, We're going to see the recovery now that the war is kind of getting sort of resolved. And then I think there's going to be one more leg down. And why? That will have to wait and see. But what I will tell you is that if you stick around on this page long enough and follow the journey, we will help you make significant money so that you can start pursuing significantly faster financial freedom. And if you enjoyed this, then you can stick around for the next video that will drop later this week as we continue to give people information about the market. And on your way out, all we ask is for you to hit the like button on the live. Appreciate y'all's time and hope you guys have a great weekend. And we will talk sometime again next week. Thanks.